Hey everybody, what's going on? It's James here. Wanted to sit down and shoot a quick 5 or 10 minute market update video for Bitcoin and maybe even a few other cryptocurrencies if there's time. Before I jump into the content, do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you haven't already. And of course, don't forget you can check the description for a link where you can join my Patreon for just $7 a month. That will give you access to more frequent updates. So real quickly, I want to talk about Bitcoin because there's just obviously this bounce that's happened in the last 12 hours, which has been a relief. Oh boy, it's been a relief. I was really starting to doubt, and I talked about this in my Discord last night. I was starting to doubt that we were going to get the bounce, right? Even as somebody that thinks the top might, and I say might, be in, I didn't want to sell everything on a dip. You know, selling a dip is never, or I shouldn't say never, but selling a dip is rarely a good idea. Even in a bear market, you typically want to wait for the bounce, right? So I started to think, gosh, are we just not going to get a bounce? What's going on here? But we did get this bounce, so I want to talk about it, and I want to tell you that it's not all bad news and it's not all bearish news, and I don't want to make it sound like there's just absolutely no chance that Bitcoin can continue moving up, because it certainly can. You know, on the positive side of things, on this weekly chart, what we have here is we have RSI putting in a lower low, right? Easy to see. But on price, we actually did have an unconfirmed higher low, right? This could still completely shit the bed, and then this would be a lower low. But right now we have an unconfirmed, what's called a hidden bullish divergence. Hidden bullish divergences happen in uptrends. It's essentially where price makes a higher low, RSI or an oscillator makes a lower low, right? That's all it is. And it's a trend continuation signal. So if this week, and it's a long week ahead, 6 full days ahead, if this week can close green, right, it's a good sign that this might actually be in play, which would be awesome, right? Because again, even though I tend to lean to the bear side, I'm rooting for the bulls in every way, I promise you. Even right now, I'm still down about 15 to 17% on my whole portfolio from where I was a few weeks ago. So obviously I want to see that go back up. But some things about the bounce that you should be aware of, and some things about this weekly chart you should be aware of. Again, you know, we did take out this low back here. We basically broke down. We had not done that this entire bull run. I'm going to turn the RSI off so it's easier to see this. Right, we're still above the 19-week moving average, so we haven't lost that very critical line of support, so that's good. We haven't taken out this low, so that's good, right? But the bad news is we did put in this. It's a wonky double top. It's not perfect. You know, this wick is a little higher than what you would normally see on a double top, but it is a double top, right? There's your left, your neck, your right, your down. So if it's a double top, you know, the textbook says you go back up to test that neckline, and then you keep going down. So I'm a little concerned about that. That's one of the things that's really keeping me kind of on pins and needles, if you will. If we go down to a smaller time frame chart, this is a daily chart, and in the last video I talked about you want to watch this bounce, right, and watch the volume on the bounce. Is it really good volume or is it crap volume? Because that will help give you an idea of whether it's a dead cat bounce. We're obviously outside of this channel, and then we take a look at the volume. It's not good, right? It's not horrid. It's not like non-existent, but when you compare it to these previous selling volume bars, it ain't good. Now, again, let's counter that with the bullish side of things. This green bar, which is going to be closing in just 4 hours or so, as long as it doesn't break down before the daily close, as long as things stay positive, it's actually gobbled up these previous 3 candles, right? That's a very bullish thing. When you see something like that, you would normally expect it to be a reversal and to keep moving up. Doesn't mean moving up to like 70K, just right through here, right? One of the first major obstacles that the bulls need to take out is going to be this 200 moving average. Now they've crossed back above the 50. It looks like it's found some support there, hopefully, right? But they are going to need to chop through all of this volume through here, which is this zone through here that they've got to chop through. That's quite a tall order. Then they've got to come up here and they've got this 200 moving average sitting there, which is normally a strong line of support / resistance. And they've got this whole zone right here, all the way up to about 59 to 60K, that they've got to try to overcome to resume this uptrend. If they can't do that, that's the place where you're going to see a lot of professional traders looking for short positions right through this, you know, what was previously demand and then flip to support, flip to supply, right? Same thing back here. As it first broke down, it came up and retested that, and it had no chance in hell of cutting through it. I wanted it to cut through it, but it didn't. It just completely got overwhelmed by the supply and completely fell apart. So this is a big test if it can even get up here. First, it's got to get through this area here. So those are some things I'd watch. When you look at the 4-hour volume, again, we're not seeing the type of volume that I want to see. What we're seeing is this volume on this candle here, pretty good buying volume there, but then it was followed up by 2 not so impressive candles, right? The good news is the sell volume was also very low, okay? But this 4-hour candle is about to close in half an hour, so I'm just going to keep watching it. There's not a clear direction here yet. This one's bigger than this one, so that's something, right, if you're a bull, but it's still not as beefy as what I would really like to see. So those are some things to watch on the 4-hour chart, the daily chart, and of course the weekly chart. One other thing about that weekly chart, and this is more bullish than bearish, just heads up. If you remember, in previous bull markets, it was very normal for the price, or excuse me, the RSI to come back down to what I had nicknamed the bear market box, right? Boom, right here in January 2016, right here in later in August of 2016, here in March of 2017, here in July of 2017, right? We found support on top of that box mid last year and then launched off of it. So it could just be that we're going to correct down to that box. And if this is a correction, what I would anticipate, guys, I would anticipate this thing bounces maybe to 55 to 57K, hopefully more like 59K, right? But after that bounce, I would anticipate that it breaks down, does come back down around this $42,000 to $44,000 area, and then if it's a correction, starts to move up from there and continue its uptrend. That's kind of what I would expect. Also, one thing I wanted to share, we're about 7 minutes in, I want to share this and I'll wrap up with this. I had talked previously, oh, that's my fork stuff. I talked previously about how, last year, one of the things I was talking about was I thought that we would get this bounce back in like April, May, and then I thought we would keep moving down. And that was where my analysis seemed to be very wrong, right? Seemed to be. Let me show you something. I had the distinct pleasure of realizing today that I wasn't wrong. Not that it helps. It doesn't help at all financially for anybody, but it at least made me feel a little better, right? So I thought this thing would get a bounce, fill in some of these gaps, and then basically do something like this, right? More downside. I was thinking down to like 1K to 1200 was like my ultimate target. Now 4K was the first target when we were back here, but once it broke down so hard, I really did think we'd get a dead cat bounce and then move further down, which is why the Bitcoin that I bought down around 4,000, I ended up selling it up around 6,200 all up to 7,000, kind of took profits through there. But if you actually look, we can draw some trend extensions over here. And this is Bitcoin versus M1, which is money stock. Look at this. It did exactly what I thought I was going to do, right? It just didn't show up in the US dollar value. So it went down, it had a stay cap bounce, and then it went down. Just missed the 1, but it came very, very close to retesting the all-time high on Bitcoin, right? Very, very close to that. And then what happened, one of the reasons that even after it didn't keep going down last year, what I was waiting for, my Discord saw this, and I was pretty vocal about it on social media as well, as I kept saying, it's okay, bottoms typically aren't V bottoms. You're typically going to get some sideways movement. You're going to get some ranging action, so don't panic. And we didn't get it in the US dollar chart. All we got was this really weird pump, which is what made it look like a dead cat bounce. But guys, I didn't even think to look at this M1 chart. I never looked at an M1 chart. I always looked at the M2 chart, which looked totally different, right? Look what did happen. It's literally what happened. After this thing dropped last year, it just missed its trend target. It came down, just missed that old high, and then it really did range sideways for 3 or 4 months, basically from May 4th all the way over here to when it broke out in October. Now, on the US dollar chart, this looked like distribution to me, right? I was looking at it, it was high. I thought, okay, well, this is going to distribute, and then it'll move back down, probably back down to around 7K, and then I'll buy down there, yada, yada, yada. But what actually happened, if you look at this, on this M1 chart, you can see, well, no, you're not getting distribution at the bottom of a move, right? This was obviously accumulation. This was that sideways range I was waiting for, and then once it broke out, look out, up she went, right? So really interesting stuff. One thing I would say about this chart, I'm getting too long-winded, so I'm going to say it quickly. In reality, versus M1 versus money stock, Bitcoin is not sitting at an all-time high. In fact, it basically double topped with last year. I'm not saying that's bearish. I'm just saying be aware of that it actually is not performing near as well as it seems to be performing. Again, not a diss on Bitcoin. The same thing can be said for the stock market. Same thing can be said for gold, etc., right? Just saying that this pump, it really was engineered by the amount of liquidity that the Fed was pumping into the markets, trillions and trillions of dollars worth of liquidity, and the lower interest rates, etc. It really was, one of those things where had that not happened, this thing probably was going to go back to 1K or lower, right? So, and again, not about like trying to like say, oh, okay, well, I was right and blah, blah, blah. Nothing like that. Again, it doesn't matter why. You've got to play what's there. You got to play what's happening. Still a mistake on my part not to buy back all the Bitcoin that I sold, right? Unfortunately for me, it was a 7-figure mistake, but that's the way life goes sometimes. But it is a chart I would recommend you keep an eye on, because as they keep putting out more and more of the stimulus crap and keep printing more and more money, I think this is going to become more and more relevant and useful in trading and kind of keeping up with what's going on in the markets. So one of the things about this chart is when you look at the US dollar chart, Bitcoin looks like it's in this massive bubble, like it's going to pop at any moment. And again, maybe it did pop, maybe 64 or 65K was the top. But then you look at this chart and you're like, well, it's not really looking like a bubble at all compared to the M1. So this right here gives me a little bit of pause when it comes to being overly bearish, right? And I'm not trying to like, go back and say that it's not a bubble. I definitely think it is a bubble, but when you look at this right here, how far can this bubble go? I don't know. It's really introduced a whole lot of questions in my mind. Is 64K the top? Maybe not. Is 150 going to be the top? 100, 250, 500? Who knows, right? I would have a hard time seeing this thing go past 100, even if the top is not in. But in these previous times, we didn't have all this money printing going on. So, this was Bitcoin versus money stock, and this was Bitcoin versus money stock, and it looked just like a USD chart. And then over here, this looks nothing like the USD chart. So, just something to be aware of. All right, coming up on 14 minutes, depending on how I edit this, so I am going to wrap it up there. But please remember, I'm some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed the video, be sure and give it a thumbs up. Make sure you subscribe to the channel. And of course, don't forget to check that description for links where you can join the Patreon for just $7 a month. This is James with Crypto Common Sense, reminding you to please trade safe.